The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're here to talk taxes. And even though tax season is over, those tax issues just don't go away. I will tell you that. And so we're really on the cusp of May. Tax season just ended a couple weeks ago. And so now we kind of shift into another time of year, another season. And people say to me all the time, just what do you guys do the rest of the year? So we're going to talk about all the things that you can count on for EG Tax that have to do with your taxes and your finances. And of course, I'm joined in studio today with Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. So, I just had somebody the other day said, well, so what do you guys do? And I thought, that would be an interesting show because a lot of people might have a problem, don't know where to turn, and maybe surprised some of the things that we do after the big tax season, right?
That's right. I mean, we do a lot. I mean,
we do
a lot.
And most everything we do in the summertime does not cost anything because we do so much of this at absolutely no charge because we want to help people. And the first thing I want to tell you about that we do is we deal with letters. Now, I know if you're listening, there's a lot of people getting letters and they don't know what to do with with the letters, right?
Right. We're seeing a lot of letters for the IRS right now, still dealing with the third stimulus, New York State asking for W-2s.
And let's talk about that. Why would New York State ask for a W-2?
Good
question.
Don't
they know?
Good question. And that's what people say. They already got the W-2s. Why do I have to send them to them? Well, they say it's for identity theft purposes, to help protect your identity. We say it's to delay your refund.
Right. And the first thing I would say is if you don't like that they're holding up your refund, change your W-4 so that they don't have so much money to play around with next year. But that's something else. But part of what the letters people get, they don't understand why they're getting the letters. And it doesn't mean that you're getting audited, although it might mean you're getting audited. So a lot of it has to do with how to read those letters. And for the state, those people who are getting letters, you have to answer them.
Right.
So it's kind of like playing tennis. They hit the ball into your side of the net and you want your money. And if you ignore them, they keep your money because until you answer that inquiry, it just kind of means that you agree with what they're doing and they're not going to pay you.
That's right. You ignore it. They don't care. They're going to keep it, or they're going to keep adding interest and penalties to what they say you owe.
Right, and even if you don't owe anything.
Right. And if you don't respond saying, I don't owe you, they're going to keep billing you.
Right, so that's the first thing, letters. We help you with letters. So if you're somebody that even did it yourself and you got a letter and you just don't know how to read it, how to understand it, what they're looking for, are they going to come pick up your firstborn? EG Tax is here to help you. Just give us a jingle at our corporate headquarters at 632-7886. We will help you with the letters. Again, I'm Esther Gulius, the Tax Lady, 803-0930, 803-0930, star 930 on a cell phone, and you can text us at 716-803-0930. Okay, the next thing we do, and again, I know we have people calling in, but wanted to lay some groundwork here. Audits. Now, audits aren't necessarily meaning that you meet with the Internal Revenue Service anymore. Isn't that correct, Chris?
Right. That's what people always, I got to go downtown and meet with somebody and show them all my receipts. Well, lately it's just been letter audits.
Right.
And where you have to respond and send everything in via a portal or the old-fashioned way, the mail. But then they'll review everything and then they'll respond. And who knows, once with COVID being fallen off to the wayside, maybe things will change, but that would mean the IRS would have to have people working back in their offices.
Right.
And they don't. But New York State
But
is...
but here's the thing. So it's another form of letter most of the time, and it's basically with them matching up the information that they have on file against what was submitted, and many times, if not all the, let's say 70% of the time, those letters can be very incorrect or partially incorrect.
Right, yep.
And so that's where understanding tax lingo really comes in handy.
Oh, yes. Because, I don't want to say a phrase that we always say, we know the angles,
Right.
and the IRS will mail a letter because they got in their computer system that you got reported some type of income. But they don't know, like if it was a 1099 NEC, they don't know what the expenses are.
That's exactly right.
So
NEC would be non-employee compensation. So the thing is that would have gone on a Schedule C. And the thing is, I can think of one of my clients who is a corporation, and one of the one of his clients sent him a 1099 in his Social Security number. Well, we put it under the corporation, and so when the federal government wrote to my client this letter that says, "Oh, you owe us self-employment taxes and income taxes." So we had to go back and show that 1099 was issued incorrectly, and of course, then he didn't owe the money, and it was sizable. It was like $8,000 or $9,000. Wow. So those are things that are really important that we do to help people.
Yes.
All right, let's go to the phones. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Let's say, hey, Darcy, how can we help you?
Hi, I'm a client of yours, and I love EG Tax. I just recommend you to everybody. And
thank you so much.
Try to help, and I appreciate that. My question is for a healthcare account, savings account.
An HSA?
Yes, that's it.
Okay.
The head of a household. I am over 55, and I have one child that's still under 18. How much money can I put in there? I guess it's a gray area.
Are you? Is it a single plan or is it a family plan?
It is a family plan.
Okay, so then you're looking right around, and I'm going off the top of my head here, around $6,700 to $7,200, as long as it's the high deductible with the HSA.
It has to be the high deductible plan, right?
It is. So that's 67, you think, approximately?
Yes.
Yeah, but you can call the office. There's so many numbers that change. So what you might want to do is text us, and we'll look at the exact amount and text you back, or you can call the office on Monday, and we'll give you the exact figure.
I appreciate that. Thank you so much.
Okay. Hey, thanks a lot. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930. You can text us at 716-8030930. And let's read our first text, Chris.
Esther, good news. I got both my federal and New York State tax refunds automatically deposited already. Thank you for all your good work.
Oh, that's great. I mean, people have really, because of COVID, they've really become very patient because the IRS has been so slow. So that's a wonderful thing, right?
Yep, definitely.
All right, Chris, I think we're going to take a short break right now. And 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll be back on the other side with your calls. And to us, your family, it's wonderful to be served by somebody that really cares about you. I was just on the phone the other day I was trying to cancel. There was a 3-day thing with DirecTV stream. And so they had a 3-day trial. So that at the end of 3 days, I decided I didn't like it. I wanted to cancel. Good luck, because nobody was going to talk to you. So therefore, then you didn't fulfill your end of the bargain, and they're going to charge you $67. So finally, I got through. But I mean, it's having somebody in your corner is so important. And at EG Tax, we really take you seriously and your tax situation, and we want to help. So whenever there's a situation that has anything to do with money or taxes, we're there. Right, Chris?
Right. And we stay up to date. I know with the midterms elections coming up, that's when we believe all the changes are going to happen. And we're going to keep you informed.
Absolutely.
What's...
Hey, let's go back to the phones. We're going to talk to Colleen. Hi, Colleen. How can I help you?
Yes, hello.
Hello.
On my daughter's taxes for 2020. She just received a letter from New York State saying that it looks like her return was calculated with the unemployment not taxable.
Okay, then that's a problem.
Personally, New York State didn't. So I didn't know is that something that our tax person should have known ahead of time, or?
There should have been on the federal government. It would have been partially tax free, and it should have been an add back if somebody took it off after the tax law was changed. If somebody had taken it off, they should have done an add back. So you want to make sure that you look under the portion of the New York State return to make sure it was added back. Now, just because they said it wasn't doesn't mean that you're reading the letter correctly. So what I'd suggest you do is give us an opportunity to look at that letter and make sure that you're reading it correctly. But if it wasn't added back in and it was subtracted on the federal, then it would be correct.
Okay. All right, so you can take it the federal, but you can't take it with New York State.
That's correct.
Yep, and that was for only 2020 for all the listeners out there. I don't want people to go, oh, my God, I didn't take my subtraction in 2021. Yeah. You couldn't.
Right. So that was strictly a COVID thing. They changed it in the middle of the tax season. So the first part of the tax season, it was taxable. Then they made it not taxable up to a certain amount. And so the end of the tax season returns done for 2020 were correct, and it would have been an add back on New York State. The ones prior to that, it would have been taxable, and the federal government would have sent somebody the extra money back. So that's the way it was. It was kind of sold back then. And so what I'd suggest you let somebody look at that letter and make sure that that's what they're talking about.
Okay.
Okay?
Thank you so much.
Hey, thanks for calling, Colleen. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Another thing that we do tax returns. Right, Chris?
Oh, my God. How are we still doing tax returns?
I mean, we had thousands of drop-offs the last week, and so we're busy getting those all done right now. So that's what we're doing. But we do 40, 50 tax returns every day this time of year, getting everything accomplished as much as possible. Remember, the automatic extension, if you didn't have any tax liability or you paid your tax liability, gives you till October the 15th to get the tax returns done. And that's what we're working on right now, plus everybody else that needs help.
Right. And, for those people listening, if you have more than 1 year, don't wait. Come in, get all the years done. Don't feel embarrassed. You're not alone.
And we can go into the IRS's portal and actually download a transcript of everything. So if you don't have anything and you think, well, I have a great excuse, I don't have everything, we can get everything.
Right. That's for sure.
All right. And then another thing that we do, and again, we're going to get your phone calls, 8030930, 8030930, star 930 on your cell phone, is tax planning. For those people that got a great big refund or got a very bad refund because maybe they got the advanced child tax credit, it looks like this year they're not going to be doing the advanced child tax credit. And so that would be something you want to figure into your projected tax refund for 2022 when you're doing the tax return. So that's part of what we do, and there's no charge for tax planning.
Right. Just that, like you said, the advanced child tax credit, if you had 3 kids and that was $750 a month you were getting, now, without getting that in advance, $750 times 6, 42 plus 3, $4,500 is going to be added to your refund next year.
That's exactly right. And so that's a gigantic refund. So that's part of what you want to figure out. If you're going to move from a refund of $4,000 to $9,000, I mean, that means you're giving the federal government a whole bunch of extra money that could come into your household. And we can adjust your W-4 so that you get more take-home pay because you're going to get this extra money next year.
Right, definitely. You don't want to do an interest-free loan. I know interest isn't much out there right now, but Do you really
Well,
want...
but interest is moving up. If you take a look, I mean, the stock market is really having a tough time because of the economy and inflation, and interest rates are moving up. So as interest rates move up, that's going to make a lot of people not be able to buy cars, not be able to buy houses. That's going to affect the way the market, how it operates. Some of the other things is if you're selling your house, if you're selling property, selling a rental, if you're just retiring and you're wondering how much to have taken out of your pension, maybe you aren't even aware that your pension might be tax-free on New York State if you're a publicly funded pension plan. Maybe you're getting your Social Security and you don't know, is it going to be taxable, and a way around that, how to use an IRA to your best advantage. And that's just part of what we do from a tax planning standpoint.
Right. I mean, anytime anything happens out there, you get extra income, give us a call.
Give us a call.
Right.
I mean, because once the die is cast, right?
Yep.
We can't undo what you won't let us help you with. Okay, let's go back to the phones, and we're going to go talk to,
Kathy.
Is it Greta?
Nope, Kathy first.
Kathy. Hey, Kathy, how can we help you?
Oh, hi. How are you?
Good. What's new?
Question for you. We have a, thank you so much for your firm doing our taxes.
Thank you.
A special third-party special needs trust for our son.
Mm-hmm.
And for some reason this year, we filed. This year it got bounced back. It was, they refiled it, and it got accepted as far as I know. But I know years from now, we didn't get a return. We didn't have to pay anything. But I know that when you send something electronically, you get a acceptance or rejection notice.
That's right.
From the IRS. I would like a copy of the, I don't know.
You want a copy of the acknowledgement?
Yes, because 5 years from now, all of a sudden they say this didn't go through.
Sure. I mean, and we did the return?
Yes, you did.
Yeah, just call the office 632-7886 on Monday and ask for our
Bob.
IT department, Bob, and he can get you a copy of the acknowledgement.
Yeah, because normally you don't need it if you want, you get a money back, you have the...
Right, then you know that they got it, right?
You got it, but this one, since we didn't have to...
Right, and I will tell you what happened with trust this year. They were looking for that 4-letter code, right, Chris?
Yeah, name control.
Mm-hmm. So that's brand new this year. So that's part of what the problem was with trust this year, but that is being all worked out.
Okay, so just ask for the IT department, because I didn't...
Ask for Bob in IT, and he'll help you to get the acknowledgement.
Oh, that would be great. That would be wonderful. Thank you so much.
All right, thank you. All right, we got a text, right, Chris?
We do. Hi, guys. I'm waiting on an amended return from the state that was submitted March 18th. Can we find out if it's been processed?
Yeah, we can, right?
Yeah, he
Give him
or
a call.
she give us a call. We'll do a 3-way conference call, and they'll tell us what the status is.
I mean, I have to tell you, I have some real severe problems with how New York State does with handling refunds, but I have to give them kudos. They are very good on the phone. Wouldn't you agree?
Right. New York
As
State.
opposed to the federal government, who is not so good on the phone.
Yeah, New York State answers their phone.
Right.
It may be 5 minutes, but they'll answer.
Right.
They'll get to the right department, and they'll give you what you're looking for.
Okay, and the other thing that that EG Tax does is we can help you. Like, for instance, I had somebody texted me the other day and said, gee, they still haven't taken the money out of my checking account. What do you think that means, Chris?
Well, either A, you didn't have the money in your account, or B, there was a wrong routing number
Right.
or account number listed.
Right. So if you've been sitting around waiting for them to take the money out of your balance due, out of your checking account, and it wasn't a check you wrote, because that's a horse of a different color. But if it's the direct debit and they haven't taken it out, there was something wrong with the account number. And it's up to you to get that balance due paid as soon as possible. So write a check, send it certified mail, because you don't want to be penalized for each day that it's late from the 18th.
Correct.
Right?
Yep.
Okay. All right. Let's go back to the phones. 8030930, 8030930, star 930 on a cell phone. And we got Greta.
Hi, Greta.
Oh, hi. I just have 2 quick questions. And I just did my taxes. I had an extension. and I was on unemployment for a while. And I remember Esther saying 2 months back that you can get earned income credit for the years 18 and 19.
19.
And but when my taxes were done, she said that I could only get the earned income credit for the year 19.
That's right, for 19.
Yeah, for 19, but not.
In other words, you based the earned income credit on if you had more wages in 19 than now, you could base your earned income credit on 19, not 18.
Oh, I see. So it's either one or the other. It's not.
No, it's 19. It's either this year's earned income or 19. So you could, let's say this year, because you're on unemployment, you didn't qualify for the earned income credit. But in 19, you made $12,000. You could base the earned income credit on the 19 tax return if you had more wages in 19 than you did in 21.
Okay, I got it. Okay. I just want to make sure that it was done right.
No, it's correct.
Okay, thank you.
All right, thanks, Greta. Another question you said? Nope, she's gone.
Yeah.
All right, let's go to Chris in Tonawanda. Hi, Chris.
We'll take Chris after the news.
Oh, we do have to break for the news. I'm Esther Gulius, 8030930, 8030930, star 930 on your cell phone. We got Chris and your calls after the news. Hey, this is Esther Gulius, the tax lady from EG Tax, and we want to make sure that moving forward, you get everything that you're entitled to, and if you have any problems or questions, you know who to turn to. We think of you as family, and we really want to take care of everything. Right now, we're dealing with what does EG Tax do during the rest of the year? Well, we're really busy, and because we help people. So again, if you're a client of ours, we certainly want to help. If you aren't a client, we still want to help. So you can give us a call. I'm joined in studio with Chris Fabian. Hey, Chris, how you doing?
I'm doing good. It's a great day out there today, and looking forward to spring and many more good days.
Okay, so before the break, we were talking about if you had a balance due and they haven't taken the money out, you better get it paid, number one. Number two, what if you have a refund coming and they haven't gotten it to you? There are things that you can do, right, Chris?
Well, first I would look online, either at the IRS.gov or New York State, whichever one, and see what it says is going on. If it says it was already issued and you don't have it, then there's a problem. And you really got to then dive in and see, was it a wrong bank account?
Right, because maybe the wrong routing number, wrong account number. If it was wrong, did it bounce back, and is it turning into a paper check? Have you moved? And, because they're not going to forward it, you have to get in touch with the IRS to let them know that you've moved. So all of those things are very important.
Right. And then, we've had people call and say, my New York return, I haven't gotten it, and it kept saying it was being processed, and now it says we need more information to process your refund. Well, that means you're going to get one of those letters that we said in the beginning that
give us your W-2.
Exactly.
Right.
Exactly.
And really, it's like a stall tactic, and because it ends. How many extra weeks does it add on to processing, Chris?
Oh, at least 12 weeks.
Yep. So, but the cure is change your W-4 so that you don't have a great big refund coming from New York State, right?
Right.
All right. The other thing is we want people to know is that EG Tax can help you with getting health insurance. We have a free service, and we can help you to get health insurance through the New York State of Health. That's another thing that we do.
Right. Taxes and health insurance. Who would have think,
Well, and that was because when Obama was president and he said, we're going to make the tax industry be tasked to make sure that people have health insurance. Well, we thought this is not a good idea. I don't want to tell people they're going to owe a bunch of money. So we started EG Health Connect. And so if you need health insurance, or you wonder if you can get less expensive health insurance, or if you have no health insurance, you can use EG Tax for that as well.
Correct.
Okay,
Yep.
Let's go back to the phones. And we have Chris now from Tonawanda, right? Hey, Chris, how can we help you?
Hi, Esther. Just had a question. I'm a single member LLC. I have a small business.
Uh-huh.
It made a little more this year than I have in previous years, and I got a little shock around tax time with what I.
I'm sure.
And somebody said that I might be better off looking into switching over to making it a corporation or an S corp.
Well, the thing is, if it's a single member LLC, that means that you are probably shocked because of the FICA. Well, if it's if it becomes an 1120S and you are the only wage earner, you still have to pay FICA because it has to be fair market value, fair market wages. And if you're the only person producing the income, then all the money is going to be subject to FICA anyway on the net profit. So, but some of the things that you might want to do is you might want to do a solo 401k. Because in that situation, you could put a lot of money. How much was your net profit, Chris, approximately?
I want to say about 80, 90-ish.
Yeah, see, you can do over $40,000 into a solo 401k. And, that's a great way to come up with a big tax shelter as well. There are definite benefits to being a corporation if you have employees, but when it's just you, it's a one-man band. Pretty much the same FICA would have to be paid either way. Would you agree, Chris?
Most definitely.
Yep.
Sorry, go ahead, please.
No, I was going to say, and if you want to come in, one of us can sit down with you and go over what's the best course going forward.
Right, but I would take a look into a solo 401k plan. If you don't need all that money to live on, you can really sock away some really big money into a solo 401k because you do an elective deferral and you can put in a lot of money, plus your company can match it and save you tons of money in taxes.
Oh, my own company can match it.
Your own company can match it. Yep.
Great to know.
So, I mean, it's, this, right now we're pretty jammed because of the end of tax season, but in the next month or so, come on in, we'll make a cup of coffee with you, sit down and show you some of the options that you have, because now is when you want to do the planning. You don't want to do it during tax season. It's too late.
Now, I am thinking about not only bringing on an employee or two, but also possibly within a year or two bringing my son into the business. So
once you have employees and there's other people making the net profit, then you just have to have a reasonable salary, and on that you pay the FICA. And then on the net profit, it comes through to you without having to pay FICA.
Okay. Maybe in advance.
And again, we'll sit down and talk to you. There's no charge, and kind of show you some of the options that you have.
Okay, great. Thank you.
Okay. Hey, thanks, Chris. All right, let's go to the text, Chris.
Sure. It says, the first one says, can I still contribute to an IRA for 2022 due 4/15/23 if I put in $300 in a 401k in 2022? I'm over age 50.
Well, we're missing some more information here. Right?
We need to know what his earned
total
income.
Right. What his earned income is. Because, yes, you may be, just because you put money into a pension plan doesn't preclude you from putting more money into an IRA, provided your income is under certain income guidelines. What it's like 112,000, something like that.
Yeah, we got to look to see if you're single, married, filing joint, what your AGI is. There's a lot of different.
But there is some substantial room there to make that contribution, but it's going to be based upon what your total earned income is, and your total income is going to be, and so it doesn't stop you from doing it, but your other income may make it not eligible for a traditional IRA. But that doesn't mean you can't put money into a Roth.
Right. Yep. For sure. And, and everybody says to Roth or not to Roth. Well, if you're looking to put away and you can't in a traditional, take advantage of the Roth and put more money away for you for later on.
Absolutely. Okay, we got another text?
We do. Have a revocable living trust. Like to name my grandkids as the beneficiary. Grandkids' aunt will be the administrator, and then the income will be distributed to the grandkids. Is this a good idea? Is there federal and New York State tax?
Well, I mean,
Again, we need
no,
more.
not enough information. So
Right.
it's a revocable trust, right?
That's what they say.
So if
yes.
it's revocable, then, it's just you can change that at any time. There's really not much of a shelter in a revocable trust.
Right. And that's the thing. If it's revocable, is it a grantor trust where you're going to get taxed on the income anyways? So, we really have to look at the trust details.
And what the nature of the income is, right?
Right.
But if it's just income that's going to be distributed to the kids and grandkids after your death, and it's only just plain old income that's already been taxed, they're going to inherit it with no taxes due on it at all. But if it's money from stocks, if it's money from an IRA, an annuity, then they're going to, unless the trust pays the taxes, they're going to have to pay the taxes when they inherit.
Right.
So, and again, not enough information to give a really good answer. But if you listen while you're driving your car, you can say, "What? Maybe we should go talk to them," because there are so many angles that you need to know, and in order for us to give a good answer, we have to know all those angles.
Exactly.
Right.
Yep.
Okay, and then let's see, one other thing that we do is retirement planning. A lot of people are getting ready to retire. They don't know, should I use the pop-up option? What is the pop-up option? Like a Jack-in-the-Box, bring, how much taxes you're going to have to pay, how much are taxable in New York State. Estate planning, just like we're talking about with this last caller, what do I have a taxable estate? Do I have to pay taxes on my estate? And I have to tell you, there is no estate taxes at this point in time unless you have millions and millions and millions of dollars of net asset value. And so many people that maybe have an estate of $500,000, they will not owe estate taxes. Now, that doesn't mean that your heirs won't end up paying taxes on your assets, because if the assets are something that haven't already been paid taxes on, such as an IRA, on stocks or bonds, on real estate, somebody's got to pay the taxes, either the estate or the heirs. So that would be a fiduciary responsibility, not an estate responsibility if your income is that low.
Right. And going back to retirement planning, a lot of big things are, should I wait for my Social Security or should I start collecting it now?
Absolutely. And we will put the pencil to the paper, and you're going to find out that it takes, because you leave thousands and thousands and thousands of dollars on the table if you don't collect, and you wait till 70, and it's going to take like 15.6 years to make up for what you've been leaving on the table. So at age like 85.6, you finally win the prize. But if you pass away prior to that, that means that they won.
Right. I know I had a couple in my office the other day, and the wife was like, I want my husband to wait because we need that extra money. And I said, well, that sounds really good, but do you know in those 4 years you could have had $100,000?
Right.
And, when you're 82, 83, are you going to be, when you finally break even and start winning with the government, are you going to be looking forward to that extra money?
Or is the nursing home going to get it?
Exactly. And she goes, okay, he can go to Social Security and start collecting.
No, it's true. I mean, I wish that we all lived to be 100 with great health. But that isn't the reality many times. Some people will, but many people won't. And they don't come up to your spouse in the funeral parlor and say, gee, George didn't collect $50,000 and here's the money.
Yep.
Because once you pass away, that's it. The jig is up.
Yeah. And with estate planning, beneficiaries, make sure you update
Oh my gosh,
your
and that's another thing. Make sure your beneficiaries are up to date. Otherwise, the state dictates how your estate is going to be handled. And of course, if you have IRAs and you have beneficiaries named, it's going to go right to the beneficiary, who then has 10 years in most situations to take the money out. If you don't have a beneficiary, then where does it go? It goes to the fiduciary return,
which probably will get taxed at 37% to the federal.
Right. Okay, then the other thing that we do, and again, 8030930, 8030930, star 930 on a cell phone, we have a tax school. right?
We do.
Every fall, we teach people taxes. We put about 175 people in tax school every year. And so if this is interesting to you, you might be somebody that would be a great candidate for our tax school.
Right. You like helping people. You like numbers. You don't have to be a mathematician. You don't have to have a college degree. It's just something, you learn.
But I think you'll find it fascinating because it isn't clear cut at all. It's like if this happens, then that happens. But if you do that, then this doesn't happen. I mean, and so we teach you all the angles. And at the end of the course, you go, oh my gosh, I had no idea.
Yep.
Right?
Yep.
All right, let's take a short break. I'm Esther Gulias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. I'll see you on the other side.
We are family. I got all my sisters with me.
Hey, to us, you are family, and we want to help you family members. So don't forget when you get that letter in the mail or you have a question, gee, EG Tax is available. And you can go to our website and go to Ask the Tax Lady, and you can text me a question or email me a tax question, and I'll get back to you right away. So that's our promise. Wanted to also tell you another thing that we do is offers and compromise. And I think that's so important. If you find out that you have a big tax liability that you're unable to pay, EG Tax will help you to negotiate down that tax debt, if you really are unable to pay, to sometimes pennies on the dollar, just like the big firms do. But we don't charge what big firms charge. And Tiffany is absolutely astounding with that, don't you think, Chris?
Right. She has the patience of Job. She's just remarkable. She will work with you and help you get organized, make sure you qualify, and then send everything in and be with you all the way through the process.
Sometimes what happens is you get behind the eight ball, you maybe made some bad decisions, and now you're ashamed. And you really have no idea what to do. And they keep writing you these letters and everything. Life still seems to be going along. Of course, you have terrible credit. And, of course, you can't buy a house, can't buy a car. But you're still out of jail, right? And you're thinking, okay, this is not so bad. But wouldn't it be nice to get that debt cleaned up? And that's part of what we do, and that's another thing we do at EG Tax. We help you with offers and compromise, and Tiffany kind of heads up that department. Another thing that we do is that we help you with your FAFSA forms.
Right. And, those are confusing enough as it is. And when you throw the taxes in there and your financial accounts, we will help you with it and fill it out for you. If you need it done, we'll go online, make an account with you, and we'll help you.
Absolutely. Our phone number here in studio is 8030930, 8030930, star 930 on our cell phone. Okay, and we got a text that just came in. What do we got, Chris?
It says, hello. In 2022, I won $30,000 from a not-for-profit for a car at a local church. Mm-hmm. I had to pay taxes ahead of time for the winnings. It was paid to the church... It was paid to the church and recorded on Form 5754. We have copies of all the forms. We want to make sure we have all the forms for tax year 2022. We are an EG Tax client. The church was a little confused on how to do this. Kathy.
Okay.
So, the 5474, first of all, is a prelude to the W-2G.
That's right.
It just gets you aware that you have to report it on your tax return next year. And it looks like you do have the federal withholding, so that will definitely help you. I don't know if they withheld New York State because it's going to be taxable on New York State as well. But that is a form of gambling. And with gambling, you get to do what?
You can reduce your winnings by your losses if you can prove them, and you are able to itemize your deductions.
Right. So save your losers, your lottery tickets. If you go to the casino, get a win-loss statement, and all this can be used to reduce that $30,000 again if you itemize.
Right, and then the thing is, of course, if you're a senior and you've been getting Social Security, this may make your Social Security 85% taxable. So even though you may be able to itemize and get rid of some of this if you're an itemizer, the income is still going to be reportable on page 1 of the 1040, and it may make your Social Security more taxable. So what you might want to do is give us a jingle so we can see and project what your liability is going to be, so you're not shocked next year.
Right. And not only if you're a senior, well, it could do that. It could kick you out of the enhanced star.
That's true, or earned income credit.
Yep. Or even hit you with extra Medicare payments through your Social Security. You may increase how much you have to pay for Medicare. And if you're not aware of it, that's a nasty thing when your income goes up there, how fast your Medicare goes up.
Absolutely. And so those are just, so this is what EG Tax does. We're kind of there in your corner in multiple venues. So don't just think that, EG Tax just does tax returns. We do tax returns and everything that makes the tax return. The other thing that EG Tax does is we have a lot of corporate tax returns, don't we, Chris?
We do.
And sometimes when we take over a new corporation, we find out that they're a C corporation and they should be an S corp. And so this sounds very confusing. Like, why? What does this mean? Well, a C corporation, every corporation starts off as a C corp. And in order to have preferential tax treatment, you make an election to become an S corporation. All right? Many times people start off with the C Corp, never change it, and they pay taxes on the dividends, and they also pay taxes on the money that they take out. So it's double taxation, and the corporation's paying taxes. So moving to an S corporation is remarkably a tremendously important thing to do. It can save you thousands and thousands and thousands of dollars in taxes. And if you just ignore what I'm saying, you're just going to keep paying.
You're going to keep throwing away money.
Right.
And that's, part of our summer. Tax planning. We do every type of tax planning out there, from corporations to buying a rental property, if it's your first rental property or your third rental property, or in some people's cases, their 40th.
Or for instance, you want to sell, and we'll help you to get and do a 1031 exchange so you don't have to pay the taxes.
Right. And there's a lot of things. How about, we mentioned earlier with tax planning, but you said selling a house. How about selling mom's house?
That's true.
How often do you see somebody come in your office and go, oh, yeah, by the way, I sold mom's house this year. Okay. Was it in your name? Was it in mom's name? And then they're like blown away that it affects their tax return and how much it could affect their tax return.
And then that's another thing. Many times you'll have parents that are older who want to gift you the house. Well, part of what EG Tax lets you know is that receiving a house as a gift may feel really good right now, but it won't feel so good when you got to sell it, because at that point in time, you have to go back to the original basis that your parents paid for the house plus improvements. However, if there was a life estate, which is another way of them gifting it to you, that protects it from a nursing home and gives you the stepped-up basis upon the inheritance and their death. So these are just some subtle things that really can make a big difference.
Right. And, as always, during the summer, we'll have our special guests on the radio to help you with different things. We'll have Jeff Katz for estate planning, Dennis Kitchen for general law questions, Jesse from Cross State Funding to help you with mortgages. We'll just
I will tell you, talk about mortgages. Right now, interest rates are going up, and if you haven't refinanced, please don't wait any longer. Interest rates are going up, and everybody's complaining about the cost of gas. Well, if you're paying an extra $300 or $400 a month in house payment because you don't want to make the call to refinance and your mortgage is at 7%, you can go down to 4%, you should be really mad at you because, you have to help you. And in order to do something and get a different change, you have to do a different thing.
Right, right. And we'll also look over your last year's return. If we didn't do it, you can bring it in. We'll look at it. If you hear something on the radio and go, wow,
I didn't know that.
I didn't know that, or my tax person never asked that. We'll
Right.
take a look and see what the changes, if there are any changes.
Absolutely. And the other thing is with kids going to college, a lot of times parents don't know what to do. My kid is now working. Do I have to put their W-2 in my tax return? Can I still claim them? Can they claim themselves? All of those kind of things are so important, because families keep changing, and the dynamic of the family changes, and with that change is a tax change.
Right, right.
And so think of us kind of as a sounding board. So if you're sitting around and you say, gee, I wonder how that would help or hurt, give us a call. Go online to EGTax at egtax.com, ask the tax lady, and we're happy to help you.
And, not to mention, one of the most complicated forms out there that impact your tax return that aren't on your tax return is the new W-4.
Oh, oy vey.
That's what everybody's saying right now, because I've seen people who are getting like $3,000 back this year only get back $500.
That's right, because of the W-4.
Right, right. And we'll sit down with you. We'll calculate it out, because it is very confusing, and we'll help you go through it. And, do you want a big refund? Do you want a little refund? Of course, we'll always say get a little refund.
Well, I mean, everybody wants a big refund, but let's face it. If you have a $12,000 refund, that's $1,000 a month that you sent to them that you didn't have to send to them.
Yep.
And then at the end of the year, you hope to heck they give you the money back.
Right.
So part of what we do is we say, why would you want $12,000? Why don't you just get $3,000 and get $9,000 extra to live on? So that's why I said we're kind of a sounding board. We give you another look at how to do the same thing. I had a client the other day that said, gee, if I would have known, I wouldn't have taken out the $60,000 out of my IRA, and I'm under the age of 59 and a half and have to pay all these taxes. Hello? I mean, we would have given you some other options.
Right.
And that's where having a partner, a sounding board, is so important.
Yep.
Right?
Definitely.
All right. Well, I'm Esther Golias, the tax lady, up from the tax season. We had a great year. I thank you for every one of you who have been such loyal listeners and clients. And until next week, I'm Esther Golias, the tax lady, with Christopher Fabian. Have a good week. Thanks for listening. Bye-bye.